Welcome to Beyond the Chain, the podcast from Nash that takes a deep look into blockchain technology and connects the dots between decentralized finance, business, and the wider world. I'm your host, Chris Fenwick, and each week I'm joined by a Nash founder and special guest. This week here with me is Nash co-founder Fabio Canesin.
Hi Chris, good to be back.
And our special guest this week is Hongfei, well known as the founder of Neo.
Hi Chris, it's good to be here.
Hi, perhaps you two would like to let us know how you know each other.
That's a long history and complicated history.
Yeah, well, why don't you go first? Yeah, from your perspective.
I will summarize that from my perspective, it was early 2017, and there was this promise of smart contracts after 2016 launch of Ethereum. And there was this project in China called Unshares that was going to do smart contracts. For me, it just looked like a perfect place to be. Today it's different, but at the time I was calling it how China, digital and mobile finance are the future. And yeah, now it's obvious that like nobody even has cash anymore. But at the time it was like how it's evolving so fast. And the first thing I did was, okay, it's all in Chinese, so let's translate it to English. And that's probably the day I met Hongfei through the internet.
Yeah, what a history. Yeah.
So first, I translate with few material with the guys, and then I organize a small group of people. Many of those which are working with me now on Nash to actually start building things on this future platform of Unshares. And it was really good timing because it ended up being that 2017 I also had a big growth in the industry itself, really tied to smart contracts. So everything that were building for Neo ended up being in the right place at the right time, which affects a life, right? It's not only having technical capability, it also needs some luck. So it was very lucky for me to meet Neo at that time. And I think it was very lucky for Neo to have that group of people building those things at that right time as well, because it attracted a lot of attention.
Yeah, I completely agree with Fabio. Yeah, it's effort, endeavor plus timing. I would say it's a life-altering experience for both of us. From my perspective, so there's one day in early 2017, I was having a meeting with Eric Zhang, founder of Neo, and we are worried about how to spread the word to the English-speaking, the wider global blockchain community, because all our technical documentation are in Chinese, and we don't have good engineers, talents to translate it to English, not to say to understand it first. So we are really worried about that. And just a few hours after the meeting, Eric started to laugh at his workstation. He said, someone just did it. Someone anonymously just did it. I rushed to his computer and saw all the documentations in English. That's just kind of like a miracle. And the thing that's more miracle to me is later on, I realized that the guy who helped to translate all the documentation in Chinese, didn't even know Chinese. So I still don't know, how did you do that?
I think it's it's never only about yourself, but it's about the people that you can bring around you. So I was very fortunate to know the technical side and be able to find people that was in the intersection, right? So there was some people that was very important, and one of those was Snow Powers. I don't know if he wants me to use his real name, but he's now an engineer at Google. And he is from Singapore.
Ah,
So he would actually review every translation we would do. So we would translate automatically, and of course we know the text, so we would like fix it as we think we should be, and he would review the Chinese translation to make sure it was actually high quality. And at the time, he also was just out of college. He was not this amazing engineer from Google. So it was like we get these really high quality people actually looking at our work as well. So that's how we did it. We did actually by building the community, we were able to translate it without knowing Chinese, which is crazy.
Cool. Maybe, Dar, could we just go back a little bit more? Because you're quite well known in the blockchain world because of Neo, but could you tell us a little bit more about your background generally? So what were you doing before you found out about Bitcoin, created Ant Shares?
Neo, at that time, you called Unshares. started in 2014. 3 years before that, in 2011, it's around that time I came across Bitcoin, and I think I read it from Slash, maybe I can't remember exactly, but I just got fascinated about the idea. I started to spend a lot of time research on it. I also remember the night I read the blog, I sent a message to one of my college classmates. He is working in Japan. I told him I got something very, very interesting I'd like to share with him. And after that, we every week we spend hours talking to each other about Bitcoin. But I didn't buy the first Bitcoin until 2012, because before 2012, there's no crypto exchange in China. You have to the only major exchange is Mt. Gox, and you need to have US dollars to buy Bitcoin. I don't have US dollars at that time, so I wait until there is one exchange called Bitcoin China popped up in China, and then I just bought my first Bitcoin in my life. So I still remember it's around $10 or a little bit over 60 Chinese yuan for one Bitcoin. Luckily, my coin possession increases instead of decreases. I think it's March 2013. I started to connect with other blockchain evangelists in China, and we started a team or organization to promote blockchain. We called BitAngels Club, and there are 7 of us. We're regularly doing meetups, doing conferences in China, and then later on, we decided to spin off a idea for a platform to do crowdfunding through cryptocurrencies, and later that idea becomes Anshares and then rebranded to Neo. So basically, that's a little bit of history about Neo.
So you've obviously been around for a while, and you've seen how digital currencies have been evolving over the last few years. So what are the main trends you've seen, and how do you think digital currencies are going to continue developing in the next few years?
I think digital currencies are becoming a little bit more mainstream, especially in China. A lot of people, it's difficult for them to process offshore US dollars. And I saw many of people from countries that has foreign capital restriction, they are adopting stable coins. They're using stable coins as an instrument of payment to do international business, international trading. So in general, especially in China, we're going cashless. I haven't touched cash maybe in a year. So everyone is going digital, and a part of them, especially the part of them are more involved with international business, are slowly adopting the new stable coin as an instrument of payment. I think the future is really promising.
One thing that I'm really interesting to hear of these conversations you had with your friend in Japan. How was those conversations? You guys were thinking about the future. You guys were thinking about the present. Like, how did you see BTC at that time?
Yeah, the conversation are mixed with several topics. One theme of the conversation is Chinese people are working really hard, Japanese people are working really hard. But around that time, I think the average salary of Japanese people is maybe 4 or 5 or 6 times of Chinese employees. So that means the efficiency is really different, or something fundamentally need to be changed in the future. So if a Japanese guy working in McDonald's and a Chinese guy working in McDonald's, they're doing the same stuff, their working efficiency is the same, why one guy is earning much more than the other?
So you guys were more worried about the economics of money than actually the technology itself.
Yeah, it's a mixed with technology, economics, and maybe value
Mhm.
culture.
How do you see that for the future now? Do you still share the same beliefs you shared back then?
I think that we're seeing a more interconnected capital market across the globe. So the reason why a Japanese guy working in McDonald's earns more than a Chinese guy working in Chinese McDonald's is because there are barriers across the border. So there are some people in Japan, their efficiency are much higher than the Chinese people overall. So their efficiency just trickle down to those people that are doing general jobs like working in McDonald's. So I believe that's the reason. But with the invention of blockchain, with Ethereum, Neo, there is a emerging network of frictionless, borderless global capital flow. And given that a global network, the level of efficiency will be more flat across the world. A different way of globalization.
Yeah, certainly capital has not been as free as goods. So you have been able to build your factory and actually incentivize it to ship and import goods, but capital has been very different.
Yeah, and also if you are a billionaire or maybe multimillionaire, you can figure out how to move your capital freely across borders. But if you only possess a few hundred, few thousand US dollars equivalent value, the overhead will be too big. But with blockchain, it will be more frictionless.
And just looking at how things are developing recently, especially this year with the growth of DeFi, what do you think about this trend?
Overall, I think DeFi is a huge step up comparing to the current DeFi 2.0 is a step up comparing to DeFi 1.0 or decentralized change, the original form. I think Nash emerged as the first batch of DeFi applications, but currently the new projects they're adopting different mechanisms like automated market maker, like compound. You deposit your collateral can also be borrowed out by other people, like Uniswap. They're issuing a token to monetize the liquidity provider. So the model are evolving. We're constantly seeing new things.
Yeah, I think a lot of people think DeFi is something new, but this is funny because blockchain has always been about DeFi, right? Like Bitcoin was created to be a decentralized money. So isn't that fundamentally DeFi, right?
Yeah.
I think that this view of actually this is a second wave. It's like we are looking at what can be built now with the primitives we already have, right? So it's like we are at a point where we can look at and say, hey, we already have digital finance. We already have tool sets on our garage, right? And now what else can we build on top of that? So it's much more about composing these new instruments than actually going back to the fundamentals of the decentralized networks itself. So you say, hey, blockchain decentralized networks exist. This is smart contracts. This is digital money. So what can I be building on top? So the new DeFi is about more complex instruments, right? So it's about borrowing, it's about lending, it's about tokenization of interest. I think one thing that had really good fit with the mentality of people in blockchain is about interest earning, right? Like, how can I have my assets sitting there and receiving some interest? As Hongfei was saying, this was like a fundamental innovation in many forms, right? So Compound did it with these C tokens, which always go up. Maker did it with giving you interest on this CDP for issuing a stablecoin. Then Uniswap did it with providing liquidity to a pool. So they are all about fundamentally giving interest on assets to be sitting on the blockchain. So I would say the first DeFi wave is digital cash. The second one is digital interest. And now we are going after instruments like derivatives, synthetics, which are a form of derivatives. It's like, okay, so I have interest, I have money. What can I build with interest and money, right? So it will be the third wave of DeFi.
Yeah, and so how is Neo getting involved in this whole space? The sort of second, third wave of DeFi.
Yeah, I want to summarize that from my point of view, there are three main characteristics of the second wave. The first, from peer-to-peer to peer-to-pool. So the first wave of DeFi is always trying to match demand and supply one-to-one. But the second wave DeFi use automated market maker to pool all the people that are willing to join the so-called exchange, pull their asset together as the liquidity provider. And then if there are any trader, people, or user want to trade, they have some counterparty to trade. So that's the main characteristic. And also the Compound is also using the similar idea as AMM. So that's the first one. And the second one, I believe, is reuse of liquidity. So every asset you put into, then you get a receipt of that asset, and the receipt trade can be collateralized somewhere to use its liquidity again, maybe generate interest, maybe collateralize it to build some synthetic assets. So that's the second characteristic. And the third one is token incentives. So you have with Curve, you have CRV with Uniswap, you have Uni. So every action that boosts the adoption of the application will be incentivized. So that's the three main characteristics. And with Neo, we are building a core component or core module for DeFi called Flamingo. The first main component of Flamingo will be Flamingo Swap. It's a Uniswap-like automated exchange. So I think swap will be the core function of the whole DeFi ecosystem. Because if you want to launch a new DeFi, you need a token to incentivize its user. And the token need to have liquidity. And the best way to have liquidity is to list it on a Uniswap-like swap. So that's the first step Flamingo are aiming at. And it will be followed by other components like Vault. Vault is more like you use your receipt. If you provide a liquidity to the Flamingo swap, you will get a LP token, liquidity provider token. You can then use the liquidity provider token as a collateral to build FUSD, Flamingo USD, which is a synthetic US dollar, a stable coin. So that's the second component, Vault. And then you can use the FUSD or the stable coin to trade with 10 times leverage in an automated market making contract exchange. It's called Flamingo Perp. So Flamingo is a set of core functionality of DeFi within Neo.
Yeah, I think it's very actually important to have a few primitives on every blockchain that wants to be here in the future. So for Nash, the Nash of value proposition is to be this stable place. There needs to be a place where you hold your assets, where they go to sleep, right? Where you go to the bed and you are happy they are there. And Nash wants to be this place. We want to be compliant, not because we like compliance, but because it allows us to be this company that will allow you to trust us in many years and have a way to go from fiat to crypto to fiat. And I was talking to Young, hey, we need a lending borrowing platform on Neo. We need a stablecoin on Neo so that from Nash we can offer savings account where people holding Neo can be rewarded by holding Neo, right? So it's really that NGG is actually embarking on Flamingo because it will allow us to offer services, and now people holding Neo can earn an interest on their assets. So this is a really important primitive for any blockchain that wants to be here for the next 10 years.
Yeah, I agree with you completely. I think earning interest is a very intriguing idea. So let's say you are a merchant, you're selling stuff on the internet, you accept payment from around the world, and then if you probably need to work with Visa, Master, or PayPal. You pay them per transaction, they get a cut, and you barely earn anything from depositing money with them. But if you can accept stablecoin, a US dollar equivalent, first you don't need to get permitted by anyone, any financial institution. You just do some coding and you're done. You have the ability to accept from around the world. And second, the stable coin you received every payment, it can be automatic deposit into some very low risk DeFi interest earning project or open source code. Then your every money you accepted from your user will start to make interest for you. I think that's a very new model of international payment, and that may revolutionize how cross-border payment will be in the future.
Yeah, I think point about the sort of second wave of DeFi and the exchanges like Uniswap is that they're appealing to both traders and to holders, because holders get to lock their coins and receive interest. But at the same time, there are some functionality trade-offs, right? So where do you get your price information on the AMM model? You have to have some kind of price oracle. So what would you say about these trade-offs between kind of AMM, decentralized exchanges, and then order book-based exchanges? What are your thoughts on the future of exchanges like Nash that are actually geared towards having high performance order books?
Yeah, I think Fabio has a better understanding than me. So Fabio, why don't you go first?
I think they will converge actually. Fundamental innovation on the AMMs is not the AMM itself, is rewarding the liquidity pool. So before Uniswap, everybody knew how to do the atomic swap pooled thing. So that was not new. What was new is that Uniswap issue a token for your share on the pool and paid you back the fees from the total of the liquidity providing token. That was the key incentive. So, but AMMs has a lot of inefficiency because normally you have a base currency and a code currency, right? So if your base currency and your code currency have very different relative price changes. So let's say your code currency is dollars or your code currency is Bitcoin, as it's very common on blockchain. If your base currency is very volatile versus Bitcoin or versus dollar, you can lose a lot of money because of the way MMMs work, and because actually at the core of it, it's because blockchain transactions have a cost and they take a few seconds. And that's very different than high performance order books where you can have feeless orders being placed and they can be micro or millisecond as fast. But I do believe that AMMs will evolve so that it becomes faster. And that the second problem is you have a fixed curve, right? So most AMMs today, you are using a curve to model your price. So the most famous one is Uniswap, XY equal K, right? But sometimes you actually want to do what we call limit orders, right? So you want to put a price which is a limit of how much you are willing to pay or how much to buy for. So I do think MMMs will also need to have limit orders to allow people to define how the positions are. So it's not because I'm in a pool, I am willing to sell my tokens for very cheap just because someone sold a lot of those tokens before, right? So it's like I'm contractually agreeing with a curve right now, which I might actually disagree how it evolves, right? You can think of these like you have stop orders, right? And so I think there will be need for limit orders on NM, and I'm sure the guys in New York and Singapore and in Shanghai, they are all working on how to do that. So when NMs are faster, when NMs are with limit orders, they look a lot more like order book exchanges. So there's a reason why order books exchanges are the way they are today, Chris. It's the evolution of many years of finance, and things will converge. And from the order book side, like thinking about Nash, right? So we are already an order book fast exchange. What we miss from that side is rewarding people providing liquidity, right? So how what can we do from another book exchange such that we also reward people participating in the market? So this is an innovation that we are working on, and I'm certainly everyone who has order book exchanges is also working on and looking, hey, how can we actually reward participants in such a way that they are able to participate on every trade? Because when you join a liquidity pool on an AM, maybe it's so abstracted, right? It's so simple that people don't realize that, but you are actually being part of every trade that happens on that exchange. So when you deposit tokens on Uniswap, Flamingo, AMM, you will be counterparty of every single trade that happens on Flamingo or Uniswap, and you will be at the bid ask or at the sell and buy price of that curve, and you will be proportionally to the amount of funds you deposit. So it's like you are running this bot that will be market making for everyone that wants to do a trade on that exchange, and that's why it's called automated market making. So rewarding behavior, similar behavior on other book exchanges will be very important and critical for the future of other exchanges. And then supporting limit orders and fast orders will be very important for the future of AMMs. So I do think they will meet halfway.
Yeah, that's a very good point of view. I want to add that if you are providing liquidity to a Uniswap like exchange, exchange, in most cases, you're probably losing money for every trade because you are the passive one on the passive end of the trade. The positives, the proactive ones are trying to make money from you. But the feature of Uniswap is it democratized the liquidity provider. So in the past, if you want to do a market maker to make money, it will be very difficult. You need to hire a team or as experts to do so. But with Uniswap, it's so easy. You just put in two assets in a certain ratio and you just sit there and wait. Like I said before, in many cases or most of the cases, you are probably will lose money due to the so-called impermanent loss. But there is only one condition that you will make money is that eventually the price ratio of two tokens converts back to the original price ratio. So in that case, you will earn all the transaction fees or the different administrative fees generated by the swap. And that's exactly what Curve and other stablecoin, so-called stable swap, is doing. Yeah, Curve is the best example to show how the market maker are democratized.
I agree fully. I don't think people realize how important and how much you can do with stable coins on the blockchains. I'm really happy that we have FUSD right now because that was a piece that was really missing for the new ecosystem for a long time.
Yeah, we encourage people to do stable coins, but it's so difficult. I still don't think FUSD is the ultimate solution for massively usable stable coin on Neo because the supply will be limited. You need to supply tokens to the Flamingo swap and use it as collateral to generate FUSD. The supply is so limited, even as limited as DAI, as MakerDAO maybe. So I don't think that's the solution. We still are looking for a solution.
But Hongfei, one thing is that stable coins have so much regulation, for example, in Europe. So for a European project which operates cash in Europe, we cannot issue a stable coin. So I do think this offering might actually be the kickstarting for people to realize how much you need stablecoins. And I think you're completely right. You actually need many stable coins on the blockchain, right?
Yeah.
When you DAI now has in its composition USDC and True USD. So it's not only a wrapper anymore. It has stable coins inside the stable coin. So we need the first one, the one that gives us 100 billion, and then after that, build other stuff. And to the listeners, why don't you build a wrapper, right? Why can't you just migrate USDC to Neo? So people just did that for Bitcoin in the Ethereum network recently with the TBTC. So why not we have N USD that is used from migrating stablecoin chains to Neo?
Yeah, that's a good idea. Yeah.
So I'd like to ask one last question that steps back from the technology issues and to look instead at the blockchain community. So, Darb, do you think that project communities are maybe more important in blockchain than other industries? I'm thinking also of this story of the City of Zion translating all the documents. How important is it for you to maintain a strong community?
I think it's extremely important. Blockchain is everything about consensus about the current ledger status, also consensus about the value of your project bring to the world. So if everybody believes in what you are doing and everybody are willing to devote their resources, their technology, their talent into the project, it will definitely be prosperous. But if everyone is losing faith about the project, the project will eventually go downhill. So I believe it is really crucial for a blockchain project to activate as much as they can the community around them.
Yeah, I think there's also the whole not if you look only for blockchains, Chris, but if you look for finance in general, everything you need other players, right? So you cannot have a bank if you have nothing to lend for or no one to borrow from, right? And you cannot have exchange if you have no asset to trade and no one wants to trade anything. So you need many projects, you need people with the assets, and you need different type of assets so that you can have diversity on those offerings as an exchange or as a crypto bank, as ecosystem, right? So I think community is economy, right? Economy is exchange of value, and what you want is to have economy activity going on your network. So community is at the core of value creation in life, not only in blockchain. So I think you can say the life of blockchain because it brings value.
So you would definitely say that community is a central part of the Nash vision.
Oh, it has always been. We came from the community and we are for the community. If there's no community, which tokens are we selling and who is buying and what they are holding on our platform, right? So we need a big community.
But I guess within community, you also have these sort of open source communities and developers. So there's the two sides. There's the part that produces the network effect, the people buying and selling. But then you have these other sort of more technical communities who are writing software for free and helping to develop the platforms. That's maybe more specific to blockchain, right?
Yes, I think the users of blockchain are sometimes, or most of the times, are prosumers. They are consumers, they are maybe investors, or even speculators. But in some sense, or some of them are also a provider or producers. They're building softwares. They're building the culture. And sometimes they're spreading the word. They are giving their ideas, their suggestions. So they are producers and consumers at the same time.
Yeah, I'd say this is also a reflect of how early we are. It's still on the blockchain ecosystem, on cryptocurrencies ecosystem. Because if you look at the first adopters of any technology, they are people closer, and they are usually creators, right? And we see, like Hongfei said, we see a lot of prosumers in blockchain still. So certainly attracting those kind of consumers is really good for having this snowball and people close to you building more stuff. Hongfei, I will take more of your time just because it's really good. It's really good to talk to you after so long time.
Okay, guys, it's been a fascinating discussion, and I'm sure we could keep going on for hours, but unfortunately, we're going to have to draw it to a close. Thanks to Fabio for joining us today.
Thank you for having me, and thank you, Hongfei, for the really nice conversation.
A special thanks out to Dar.
Thank you, Chris. Thank you, Fabio.
And thank you to everyone who's listened to Beyond the Chain. Subscribe with your favorite listening stream and you won't miss an episode. The full text of this episode is available on podcastnash.io.